Hey guys, so welcome to this video. Now this video and the videos that follow it will be a little bit different. These are what I like to call our example walkthroughs, in which we walk through an example together so you can kind of understand a couple of things. Understand the theory behind the question, understand what we're trying to help you develop and really get from a calculation standpoint. And then the third thing is to how to solve the problem. And so really this is a multifaceted videos in which we're not just trying to help you understand how to get to the answer, but what things you should be thinking about along the way. Because when you start preparing taxes for your clients, you have to think about all of these multitude of information that you're going to be getting from your client and sift through what is important and what's not important, and then follow up with questions that you think will get you to what you need to prepare their tax return. So that's kind of where these example videos are all about. So we're going to walk you through the example. I'm going to talk a little bit about what you should be thinking about, and then we will show you kind of how I solve it if I was in your position. So a couple of things here. Now, the success of an example video is not to show you how to find the answer, although it's part of the process. The goal for doing these examples is to help you understand the thinking behind them, so that when you do see a problem similar to this, or you hear about a problem similar to this, you're able to solve it on your own without, a key here to duplicate that answer. All right, so let's take a look at our first example here. It says to determine the tax liability, marginal tax rate, and average tax rate in each of the following cases. So we're gonna have multiple cases here. And it says that we want to find the tax liability, so how much taxes they're gonna owe. The marginal tax rate, so that's one of the calculations we learned in this section. And then the average tax rate, again, another thing that we learned in another section here. In each of the following cases, use the appropriate tax table and tax rate schedule. So they're telling us to use one of these two to get that done for calculating the tax. Now, we've got a married filing joint, looks like, who has a taxable income of $21,911. We also have a married filing joint who has a taxable income of $42,860. So we're going to be trying to figure out what the taxes are for those two numbers. So the first question that I would ask is, do we use the tax table or do we use the tax rate schedule? Well, you got to remember what we know from our previous discussion. Our previous discussion says that we use the tax table if it's $100,000 or less, and we use the tax rate schedule if it's over $100,000. So both of these are under $100,000, so we're going to be using the tax tables to do the job for this question. So we won't necessarily use the tax rate schedule, but we will use it for the marginal tax rate when we get to that in a few minutes. So we would be looking at the tax table here. So I apologize that it's really small here, but I'm going to help you understand what's going on here. So this first one here, 21,911 is what we're looking for. If you remember how we try to figure out taxes here, we go to 21,000 and then they are married filing joint. So married filing joint is this second column here. So that's what we're going to look for as we go down through this. 21,911. So 21,911 would be right here. And again, it's tiny, and I get that. So 21,911 would be between 21,900 and 21,950. And then we go to the second column and we get $2,250. I know it's small, but you can pull these tables if you like. I'll put those underneath the video here. So $2,250. So for this couple right here, $2,250 would be their tax. All right, moving on to the next one here. Let's get the 40s here. So we've got 42,860. So again, tax table here. Second column, married filing joint, $42,000 brackets here. So then we're going to look for 42,860, or where that would be. 42,860 would be right here between 42,850 and 42,900. If we go to the second column, we see that they should be paying a tax liability of $4,764. Again, we're trying to help you understand how we would solve this. And so you'd pull up the tax tables here. In the tax tables, you would look for the amount that you need, and then you would go through it and try to figure out what that amount is. In this case, $4,764. So let's take a look at a recap here. We've got is the $21,911 taxpayer has $2,250 of taxes, and then the $42,860 taxpayer has $4,764 of tax liability. So the next question is what's their marginal tax rate? Now, there's two ways of solving this. We can do this all over again and add $1 to their rate or to their income, or we can go to the tax rate schedule and just see what line they're in. And so in this case right here, this $21,911 would be in this bracket right here, which means they would be in the 12% tax bracket. So the marginal tax rate for the $21,911 taxpayer is 12%. Now we look at the $42,860. Again, $42,860 is in that same bracket. So this taxpayer is also in the 12%. So both taxpayers are in the 12% tax bracket when it comes to their marginal tax rate. What does marginal tax rate mean? Marginal tax rate is the rate at which their additional dollar would be taxed at. So if they made one more dollar, they would be taxed at 12%. Both of them would be. All right, now let's go to the last one here. We've got our average tax rate. So average tax rate, we said, is what's the average? And to calculate the average, we would take the total tax liability and then divide it by their taxable income. So we've got that formula right there. Let's start with our $12,000 taxpayers. So our $12,000 taxpayers had a tax liability of $2,250, and their total taxable income is $21,911. If we do that calculation, $2,250 divided by $21,911, you're going to get 10.27%. Now, if we go over to our $42,860 taxpayer, we're going to do the same calculation here. We're going to put $4,764 over 42,860, and if you do that on your calculator, you get 11.12%. So to recap kind of the question here, the question asks us, what's their tax liability, what's their marginal rate, and what's their average rate? Their tax liability is based on the tax table because they're under $100,000. So we go to the tax table and we figure out that the first taxpayer owes $2,250. The second taxpayer owes $4,764. Once we've done that, then we kind of use the tax rate schedule, so the brackets, and we said, okay, what bracket are they in? And if they made one additional dollar, what would that one additional dollar be taxed at? And we saw that it was taxed at 12%. So both of them are in the marginal tax rate of 12%. And then the last thing that we did was the average tax rate. To get the average tax rate, we take their total tax divided by their taxable income, and we got 10.27 for the first taxpayer and 11.12 for the second taxpayer. So that's kind of how you would walk through an example that you might get on a homework problem or a test problem, as you break it down to what it's asking for and then searching either the tax table or the tax brackets for whatever answer you need to do calculation wise. And then for the rest of them, it becomes a formula driven problem to solving that problem. So I hope you enjoyed this example walkthrough of tax liability, marginal tax rate, and the average tax rate. And we'll see you in the next video when we tackle tax calculations. So we'll see you in the next video.